biggest mistakes that new investors make is thinking that a high yield savings account is better than investing in a stock because the yield is so high. The interest rate is so good. I'm making so much. I don't know about you, but over the last 6 months, I've gotten an email almost every month from my high yield savings saying, oh, we're pulling back on the yield. The yield is getting a little bit smaller, but it's still higher than the national average, but it's coming down a little bit. And then a month or two later, it's coming down a little bit. And a month or two later, it's coming down a little bit. But when you invest in things like Dividend Kings and Dividend Aristocrats, these are companies that have raised their dividend 25 or 50 years in a row or longer, then you don't have to worry about the yield dropping all the time. It can happen. It can happen. Everyone's going to say, bro forgot about Walgreens. Bro forgot about Walgreens. Look, if you know anything about the stock market, you can always debunk something by going, well, actually, there's this one. Of course, there's always going to be an Enron. There's always going to be, an Intel. There's always going to be a Walgreens who, after 48 years, eliminated their dividend and the stock tanked. That's why you have to be diversified, by the way. Well, my bank is earning 4.5%, and McDonald's dividend is 2.9%. So obviously the high yield savings account is better, right? But remember that the dollar loses value over time. I'm going to show you McDonald's dividend. $287 per share, and their dividend is $7.08 per year. So if you had 100 shares, you'd make $708, and it is 2.44%. Not very much when you compare it to, say, a high yield savings account. SoFi is paying 3.8. Goldman Sachs is paying 3.65. Both of those numbers are higher than 2.44, right? But don't forget that the stock is an appreciating asset as well. So even though the yield is small, look at what McDonald's has done in the last 10 years, up almost 200%. And yes, 2.44%. But in the last 5 years, they've grown their dividend by 7.29% and 48 years of dividend growth. And of course, I'm not saying that a high yield savings account is bad and you shouldn't have one. Everyone should have one. But it's a mistake to compare a high yield savings to a dividend stock and say, well, the yield is higher on the savings, so this is obviously the better choice. All right, see you later.